This is the briefing for Friday, November 17th. Been an interesting week this week so far. I want to do a quick review of what occurred this week and some of the stuff that I've covered already in the weekday briefings. This is a daily chart of the spiders representing the S&P. And you can see, and in the briefings I talked about this rally off of this low, that it was appearing to be very, very weak in terms of the internals. And it's pretty easy to see as volume, even in the spiders, was declining pretty dramatically. Breadth, as you can see, was collapsing, and 52-week highs minus 52-week lows was collapsing. Percentage of stocks above their 50 and 200-day moving averages were falling. So right up until this point, in fact, right up until Tuesday, it appeared that this pause here was really an exhaustion move, and that we potentially were going to see another turn back to the downside, looking mainly to see if this high was taken out, because a series of the definition of a trend is a series of higher highs or higher lows, or lower highs and lower lows, and we had a series of lower highs and lower lows until this day here when this high was taken out, which suggested that this was potentially a run. This was a pause in a greater degree time frame. So you can see on a daily basis we have a run, pause, run, and then a greater degree time looking at this as a run, and then this is a pause in a greater degree time frame. Now, based on this, it was a higher probability that we were going to see some type of turn back to the downside. That's because it is always the higher probability that the internals, when they continue to weaken in a trend, that suggests then that price will correct to the internals. So it is always a higher probability that price will correct to the internals. There is a lower probability, and statistically, it's not a statistical event, but it's just for my own psychological purposes. I always put a number of 70% when we see something like this as being the higher probability that you're going to see price correct to the internals. But there's a 30% possibility that they won't, and that the internals will correct and support price. And there's usually a higher probability of that occurring around a news event. Now, we had the CPI numbers that came out on Tuesday, and of course that gave the impetus to the market to gap above this 445 resistance area. And as you can see, volume picked up, breadth strengthened pretty dramatically, 52-week highs minus 52-week lows strengthened pretty dramatically, and the percentage of stocks above their 50 and 200-day moving averages improved pretty dramatically. So Tuesday was a very, very strong day in terms of price and in terms of the internals supporting that price. So that news event, the release of the CPI numbers, certainly changed the perception of value on the part of traders and investors. And of course, then we've got this pause. So we reached a point on Tuesday of being extremely overbought, and that led to the higher possibility on Wednesday, as I discussed in Tuesday's briefing, that we were going to see some type of pause or rotation that would work off the extreme overbought condition. Now, I'll go to that right here so you can see it. So you can see this is Tuesday's. This was the end of Tuesday's trading. This is the NASDAQ and this is the NYSE. So it was pretty obvious that while it's not a 100% surety that you're going to see a pause when we get to an extreme like this, it's a pretty high probability that we will. And that's exactly what we've seen for the rest of the week. So we've got 3 days of a pause right just above the high for Tuesday's trading. So, and you can see that volume has fallen off in that pause. Breadth was declined in the pause. 52-week highs minus 52-week lows declined. They ticked up slightly in today's trading, but really no strengthening yet and no breakout move in terms of the indices themselves. Now I want to look at a shorter term chart here. This is a 15-minute chart of the spiders, a 15-minute chart of the Qs, and this is the last 3 days of trading. This is Tuesday's trading over here where we gapped up and then paused for the rest of the day. And then we've been in this rotational pattern now for the last, I would say, 3.5 days, but at least the last 3 days. Same thing with the Qs. You can see this is Tuesday's trading, and then we paused for the rest of the day. This is Wednesday's trading, Thursday, and today's trading. So we're in a pause mode right now. So the question is, are we going to see a breakout to the upside, or are we going to see a breakout to the downside? The good part about this is that the market is giving us areas of good trade location. So if we break out to the upside, that would then suggest that we're going back up and we're going to test the most recent highs, which the Qs are already doing, but we'll potentially see the spiders catch up. And then, of course, the Russell has a lot more catching up to do to the upside. On the other hand, if we break to the downside, then that's going to suggest that this move on Tuesday was an exhaustion move, and we're going to see a breakout to the downside and potentially another leg back to the downside once again. So this area through here, while it's just a lot of chop right now and something that I will stand aside on until we see a break, gives us really the possibility of good trade location. Now, if we do see a break in one direction or the other, if it breaks out, it needs to break out and go. It does not need to linger at one of the extremes. It needs to break out and go and move away from the upper or lower extremes that we're looking at right now. So if it does break out and it doesn't move quickly away, then that suggests that it is potentially a false breakout, and you're potentially going to see rotation back in through this range. So I'm going to be looking myself to take a breakout of this, but if it comes back inside this upper extreme or inside the lower extreme, I'm going to be exiting that trade pretty quickly. I'm not going to sit around and watch it go all the way back through the range in one direction or the other. So basically, if we look at what's happening with the Qs, you can see that the spiders have a little ways to go before they test this 458, 459 area. Actually, it's around, I would call it around 460 area. And then, of course, support comes in at 445 in the spiders. Now, in the Qs, you can see this is just a rotational pattern. This was a false breakout. This line here, this red trend line I put up, was the area where leg one of this move was equal to leg three, and you can see it came right down to it, and then of course came up. That would suggest that this move here in the Qs was counter trend to this move right here. Same thing occurred. You can see volume just absolutely collapsing in the Qs until we get to Tuesday's trading. Breadth was collapsing as well. And then, of course, now we've got a little bit of strengthening coming in after today's trading in both the spiders and the Qs. The Russell is completely different. And you can see that pretty definitely just looking at this chart pattern. This was a head and shoulders top. The red trend line is where the distance from the neckline, from the head to the neckline, was projected on a break of the neckline. This is the distance where it was projected, and it came right down to it. We have another area of support at 162, came right down to the projection from on the head and shoulders, and the 162 paused, and then we got this rotation back up. Now, interestingly enough, on Wednesday's trading, you can see this selling tail that came in on the Russell. So basically, the Russell showed an exhaustion move. This was signaling there was exhaustion that came into the market on this buying. And then, of course, we got follow through in yesterday's trading to the downside. And then, of course, a little bit of a bump up in today's trading as well. Volume falling off in the Russell. Now, it's typical in a counter trend rotation, which if this is counter trend, then it's typical for volume to fall off. It's typical for it to work off an overbought or oversold condition quickly without much price appreciation or depreciation. I covered all that in last night's briefing. So basically, you can see now the market is beginning to strengthen. Even the Russell is strengthening in terms of market breadth. So that then suggests that potentially the break that we might see coming forward, a break out of this short-term rotation that I showed just a minute ago, may come to the upside as we see this strengthening in terms of market breadth continue. We are basically not overbought nor oversold, so this gives the market the possibility of moving in either direction on a breakout, And in terms of volume, total volume, you can see we really tested in yesterday's trading. I guess this was when Tuesday's trading, where volume expanded up pretty nicely. Then Wednesday, Thursday, and then today. So you can see volume falling off, which is typical in a counter trend move. Same thing with the total volume in the NASDAQ. Now looking at percentage of stocks above their 50 and 200-day moving averages, this is pretty significant. This gives me another indication that the possibility of a breakout to the upside is certainly there, because we have more and more stocks, even though price in the indices has not continued to increase. We've had 3 days of a pause. The number of stocks, or the percentage of stocks above their 50 and 200-day moving averages, continues to improve, along with 52-week highs minus 52-week lows. So this is a pretty significant. This is the S&P 500, and you can see we've got 70%, 71% above their 50-day moving average, and about 51% above their 200-day moving average. In the NASDAQ, same thing. You can see the improvement that continues even though we're in a pause. Price is in a pause range, and in the Russell, same thing. So there is continued strengthening in the indices, at least going into the close today at the end of this week. So it's going to be very interesting to see what happens. Now, next week is a holiday week, and unfortunately, volume falls off. It'll start falling off Monday and continue to fall off into Wednesday. And then Thursday, the market is closed. And I think the market is open on Friday. I'll have to check that. But if it is, it's just going to be extremely low volume. So I would just be very careful. A lot of false moves can be made during a holiday week like this. So just use some caution in next week's trading. The key is going to be watching what happens outside of this area here in both the spiders and the Qs, and then monitor the internals carefully, because on a breakout you want to see the internals strengthening to confirm the direction of the move. Otherwise, it's likely to be a false breakout, and those typically happen during holiday weeks. So have a great weekend, and I will look forward to picking this back up on Monday.